Hello, everyone. This is Alexander Horace, and today we're joined by a good friend, David Morgan of the Morgan Report. Hey, David, we're happy to have you on the show.
Alex, been a while. It's good to be back.
We've seen gold and silver explode, hitting all-time highs that we haven't seen before. So I want to get your thoughts on what's driving that.
Well, it does risk of sounding trite. There's a lot of buying pressure, more buying and selling, therefore the market's going up. And having said that, I mean, gold, maintained about the $2,000 level and it broke through that. And since that time, we've more than doubled. And silver, of course, had about 35, 36 is kind of its main technical resistance level. And it broke through that and it had to work through the 40 area, but it did it pretty quickly actually. And then of course everyone was what's going to happen at 50, and there were different camps, somewhere it's going to just slice through and you'll see 50 and then you'll see a 60 print, shortly thereafter there is. But it's been a very, very rapidly moving market, which goes back to one of the things I've talked about. People are probably tired of hearing me say it, but the biggest part of the move comes in the shortest amount of time. The
Right.
third leg up is when you really want to participate in this market. And for gold, that would have been probably the $2,000 level or 25 or something like that. And silver would have been the breakout at 35. So if you just bought at the very high price of $35 the ounce, right,
Yeah.
back weeks ago, which was like a 14-year high or something like that. And here we are just a few weeks after that, and we're at, in the 50s. So, and the exchange did increase the margin requirements. You'll see that bifurcation where gold proves itself as being the most negatively correlated asset to the stock market. And that's when you might see the stock market have, further downside pressure as gold continues to move higher. However, that doesn't have to take place. Gold has already broken out on its own, and it is moving much more rapidly up than the stock market is. So it's already been given the blessings by, the bond king and some of the better known fund managers and big names on Wall Street saying stuff like, 25% allocation. I mean, when I said something like that, I quoted that allocation. I mean, CPM Group did a study from 1968 on, I forget, it was a few years ago, and their asset allocation for the best balanced portfolio was 25% gold. That we can certainly go higher, Alex, because if the institutions come in a big way, but what really started it was, a couple of years back, I said the run to gold has begun. Now, well, how do you know that, David? Well, I know that because the banks were buying gold hand over fist and making record buys into the gold market. Now that the banks have bought and continue to buy, and now if you're getting large institutions to buy along with them, that's additional buying pressure. And of course, it'll continue to push the price higher if that continues, and I believe it will. If you look at the Exter pyramid, John Exter, EXTER, you'll see that the most liquid asset available to everybody is the US dollar, with the exception of gold and silver. In other words, the most liquid form you can have is US dollar. So if you get in a liquidity squeeze, which we're seeing, you're going to go out of stocks into cash, out of real estate into cash, out of bonds into cash. So there'll be a big push, and that will push the dollar higher because there are people that are buying dollars, like buying gold, will push it higher on the DXY, the Dixie, the dollar index. For 35% of the market 25 years ago was industrial demand. Now it's like 60%. So the industrial demand alone is eating away the silver stockpile.
I was wondering if you'd like to tell the audience a little bit more about your website and what you do.
Well, it was a good time to have the interview. The site just got changed today. So we've simplified it. I mean, basically, if you want to get involved, you can do that step 1, 2, and 3 outlined up there. And then there's a little bio under that with my picture on it. And if you scroll all the way to the bottom, because people are going to say, oh my goodness, where is it? The X, the LinkedIn, and the YouTube channels are all there. So those are all direct hits that you can use to get um, to my X. Maybe that thing isn't linked like it's supposed to. So there's the YouTube channel. It looked like that X one didn't work. I'll have to tell the webmaster. But yeah, so there they are for you. So if you're already signed up for the free email list, but you want to see what's going on in X or YouTube or whatever, go ahead. Yeah.
Yeah, that's great. And I think everyone should definitely subscribe to the Morgan Report. I think it's a very good resource to use. Thank you to everyone who's watching.